Welcome back to the Dividend Diplomats YouTube channel, everyone. Lanny, Bert, the Dividend Diplomat. We are pumped up, we are ready, we are excited to talk to you about 3 undervalued dividend stocks to buy that are going to be on my watch list for the upcoming week.
Guys, it's all about buying dividend stocks. Before we get into the watch list, guys, smash that subscribe button. Give the Diplomats a nice thumbs up. We'll get in as soon as you smash it. We love it. We love you guys. We're trying to reach the millions and millions of dividend investors out there talking about dividend stocks that we are watching, stocks that Bert is watching this upcoming week. We can't wait to talk to you guys about it because the market finally is down about 8% this year to date. It is below 4,400 in the S&P 500.
I know that's what exciting is. This last week was the first week where it finally felt right, where you were just excited to watch every day and see what stocks you wanted to buy, what positions you were looking to add to, and where you were looking to grow your income within your portfolio. Yeah, the S&P 500. A few weeks ago, Lanny, we were talking about it hitting 4,800 and staying above 4,700. Now it's crossing below some pretty impressive thresholds that it hasn't hit for several months.
But the whole point here is that don't worry about the fluctuations in the market. Always stay invested, whether you're a beginner investor or just a long-term investor right now. Don't pay attention to the noise, because as dividend investors, this means that your money actually goes further, buying you more dividend income.
And the focus of this watch list is going to be 3 companies that I already own in my portfolio, because Lanny hit it on the head when he sold some of his stocks several weeks ago. See the video above where he talked through it. It's just kind of nice not having to monitor more stocks in your portfolio if you don't have to. One less ticker, one less earnings release to have to read, especially if you can find undervalued stocks that you already own, you've already vetted, and you can keep growing that position.
All the paper cuts you get from flipping through 8Ks, 10Qs, and 10Ks. Bert has to wear Band-Aids all over his hands during the quarterly earnings release season.
Yeah, I know. It gets pretty tiresome there. I got the little sponge that I sit next to as I'm flipping through the pages. But
now here's a question. How many dividend aristocrats are on your watch list?
Oh, that's a good question. I think technically all 3 of them are, depending on, one of them's a European company, so it's always a little hard to see just how many years, but it's been reported they are dividend aristocrats, so I'm going to trust them. I'm going to go with them. They've at least trended up over time with it.
Bert, do you own 1, 2, or all 3 of these stocks?
Not 1, not 2, but 3 of these stocks on there. And what about you, Lanny?
I own all 3 technically because my wife owns 1, but I own the other 2. But before we always buy dividend stocks, we put them through the Dividend Diplomat stock screener. You guys already know it. I'll run it through it really quick. The first metric is the price to earnings ratio, less than the S&P 500, and we like to look at the competition and see where it stands. The dividend payout ratio being less than 60%. The perfect ratio is 40 to 60% in our minds, because that means income goes to you at a good balance, as well as going back into the business to keep revenue going forward. Last but not least, we got the dividend growth and the growth rate. You want to buy dividend stocks that grows their income automatically. You're a passive income investor. You want that income to grow without you doing anything, and that is one of the beauties about dividend investing.
And don't forget that bonus metric, the dividend yield, where we look at after we go through the first 3. So we're going to talk to each one of the companies. We're going to run them through this screener. We'll give a little discussion about their performance, and maybe that will show why they popped up on the watch list. First company was one that my wife and I added to a lot over the last week, so you shouldn't be surprised that this stock's going to continue remaining on my watch list, especially if that price stays below $50 per share. That company is Unilever, ticker symbol UL, the consumer staple giant that can be found throughout your household with Dove, with Axe, with a lot of
mayonnaise.
other, Ben & Jerry's, Vaseline. What's impressive with Unilever is just how strong their top brands are. They are some of the top selling ones in each one of their sectors. That is why we like the company and are working towards building that position.
Bert loves Unilever. They finally went below $50 per share. They had kind of a parting of the ways with GlaxoSmithKline over a venture that they were going to do. That shut the price down quite a bit for Unilever. Again, they are now trading at $49.31 at the end of business on January 21st. So Bert, talk about that first dividend stock metric.
Yeah, so forward earnings here that we're going to use with the price to earnings ratio we found on Seeking Alpha, because again, it's not the easiest to find information here about this foreign company. I did. I'm not going to stop looking for it.
He's not going to stop.
Estimated earnings are $3.09. Divide 49.31 the stock price by 309. That gives you a PE ratio of 15.96. Well below the market, well below competitor PG as well. It's showing signs of undervaluation.
Bro, you're getting pumped up over here. I can feel it through your veins. You're getting hawkified right now.
I am. Let's go to metric 2, that annual dividend, which again isn't the easiest to find based on what website you use. We're going to say $2.06 just to make it easy. That seems about fair.
Just so you could take it easy on Unilever.
Yeah, of course we're going to take it easy. We don't want to mess around here. Gives you a payout ratio of 66.54%, so just a hair above our 60%.
It's kind of what you see in that industry, though. Procter & Gamble is usually over 60% as well. So
yeah, and we use the 60% as a baseline there because that still gives you room to keep growing that dividend going forward. Our real concern is if it starts creeping up and getting towards 100% because you can't pay out more than you earn in the long run.
It's not sustainable.
No, but 66% is something to monitor, but it's not going to stop me from buying the stock.
Again, to talk about that third dividend stock metric, Unilever's dividend growth streak. Again, very difficult to find because of the fluctuation with the exchange rate and kind of what that real quarterly dividend is. But they say that it's about 21 plus years of increasing that dividend at an average dividend growth rate of about 7.82%. So technically outpacing inflation. Not too bad. Obviously, you need to see that going forward in order to keep that passive income growing.
And their dividend yield is 4.17%, so it's
4%.
Well above 4% there.
Bert.
Too. Yeah, hopefully you can see why it's on our watch list. Year to date, the price is down nearly 9%. Yes, it has. And it's down over the last 52 weeks of 17% as well. So yeah, it continues to slide. Maybe this is the time to keep loading up and building this position. So to summarize here for Unilever, PE ratio 15.96, payout ratio 66%, 5-year dividend growth rate 7.82%, increase that dividend for 21 years, and a yield of 4.17%.
All right, Bert. It's time to jump into that second dividend stock you're watching. We're not talking about the arm, we're not talking about the shoulders, but we're talking about leg.
Leggett & Platt, ticker symbol LEG. This company's been on both of our watch lists for several months now as their stock price continues to slide and stay below $40 per share. That's usually the point that piques our interest for Leggett & Platt.
Wow, they're under $40 per share, guys, because this past week, how much did that stock price drop in Leggett & Platt? Well, guess what? Over the last 5 days, it's dropped almost 7%, so more than the S&P 500, breaking below $40 per share on this dividend aristocrat. So, Bert, the price to earnings ratio, what does it look like for LEG?
All right, so $39.03 was their last trading price here. Earnings per share, $3.03. PE ratio, 12.88, even lower than Unilever.
Bert, it's time for, okay, I'm pumped up already.
Yeah, payout ratio, let's jump in. Annual dividend, $1.68. Divide that by 303, a perfect payout ratio of 55.45%.
Perfect.
That's right, yeah, we consider a perfect dividend payout ratio between 40 to 60%. I believe you mentioned that earlier, but just to reemphasize, it's right in that range that we want to see.
So guys, Leggett & Platt so far is rocking a below 13 PE ratio, below 60% on the payout ratio. Well, they're a dividend king, not just an aristocrat, because that third dividend metric, the growth rate, increasing their dividend for 50 plus years at an average rate of about 4.39%. So a little bit lower on the growth rate, but we'll have to dive in to see what that dividend yield as the bonus metric looks like.
4.30%. So higher dividend yield, lower dividend growth rate. We always talk about the seesaw of you want a low dividend yield, high dividend growth rate, high dividend yield, lower dividend growth rate. Obviously, of course, we want to see high dividend yield.
Finkel is Einhorn, Einhorn is Finkel.
But it at least meets what you would expect. Again, Lanny said it down over 6% the last 5 days. Year to date, they're down 5.36%. Over the last 52 weeks, they are down 11.68%.
Not too bad, Leg. So they've got a nice PE ratio below 13, a payout ratio that's perfect at 55%, growing their dividend for, again, half a century to 50 plus years. Again, the yield is now swelled up to 4.3%. Not a bad investment here, Bert.
No, and I'm going to piggyback off of one of your recent stock purchases here for the third company on our watch list, T. Rowe Price, ticker symbol TROW. Lanny, since I'm piggybacking here, why don't you give us a brief summary of why you've liked T. Rowe Price over the last few weeks?
T. Rowe Price, one of the largest asset management firms that is out there. Obviously, they're growing, that baseline of assets that they're managing. Obviously, the market's done very well in the last few years, which has helped T. Rowe Price obviously generate more fees, et cetera, et cetera. Their dividend growth streak's amazing. Their dividend growth rate is impressive as heck. They also give out the occasional special dividend.
Strong balance sheet too.
Strong and clean balance sheet. So T. Rowe Price, again, is a nice dividend stock to own if you're a beginner investor, if you're a dividend investor alike. It's a great stock, one that we've owned a ton of. I think you're over 13,000.
Yeah.
I think I own over 14,000 before this big stock price drop, because in the video from last week, it was at 175. Well, now T. Rowe Price is trading below
160, and that's why you grabbed one share, and that's why it popped up on my watch list once again. Let's jump right in here. PE ratio, the price of 159.68, forward earnings of 13.33, a PE ratio below 12 right now. 11.98, yeah, lowest of the group. That's right.
If you're not first, you're last.
Yeah. I did watch that movie recently too. It's always a classic. The payout ratio, their annual dividend's $4.32. Divide that by the 13.33, that gives you a payout ratio of 32.41%. Plenty of room to keep growing that dividend going forward.
Plenty of room to grow the dividend, because the pace that they've been doing it is pretty impressive. Again, over 35 plus years of growing that dividend. They're a dividend aristocrat because they've done it for over 25 years. The 5-year average growth rate is 31.74%. 31.74%.
Yeah, they really ratcheted up that dividend over the last 5 years.
I don't expect that going forward. We'll see what they do here in February coming up, because that's the typical month that they increase the dividend. So T. Rowe, let's see what you got. But again, 31.74% on the growth rate goes very well with that dividend yield, which is
2.71%. It's climbing. It's insane to see how high T. Rowe's dividend yield is going.
How high can it go?
So to summarize a T. Rowe, PE ratio 11.98, payout ratio 32.41%. Increase that dividend for 35 years with a 5-year dividend growth rate of 31.74% and a dividend yield of 2.71%.
We'll put the chart up here, to showcase the 3 stocks. Again, you had Unilever with the PE ratio below 16, payout ratio just above 66%, dividend growth streak for over 21 plus years at almost 8%, with the yield now above 4%. And what does leg look like again?
PE ratio 12.88, perfect payout ratio 55%, 5-year dividend growth rate 4.39%, and they've increased that dividend for 50 years with a yield currently of 4.30%.
There's Bert's watch list. You got frickin' Unilever, you've got Leggett & Platt, T. Rowe Price, plenty of dividend aristocrats there. Bert, what are you thinking?
So from a purchase order here, it's going to be Unilever is a clear number 1 in my mind, Leggett & Platt 2, and T. Rowe Price. Still maybe sprinkle in 1 or 2 shares there, but obviously I want to keep focusing on growing and building that Unilever position, especially because I already own so much of T. Rowe Price.
There you guys have it. What do you think about these 3 dividend stocks? Let us know in the comments. Make sure you definitely hit that thumbs up and subscribe to the channel. What other dividend stocks are you buying right now, or that you're watching as we're here in this week of January 24th?
Everybody, let's just keep growing. Let's keep taking that cash, moving it off the sidelines, putting it into the market, and finding those undervalued dividend growth stocks to buy, so we can grow our passive income.
That was Bert the Hurt, and this was Lanny from the Dividend Diplomats.
Over and out.